Today, we are talking about the latest updates in the world of Bitcoin, and there is a lot happening right now. Bitcoin continues to be one of the most talked about assets in the global financial markets. As of today, Bitcoin is trading around 104,366 US dollars, and the price movement in the last 24 hours is showing around plus 3.43% in volatility. Even though ups and downs in Bitcoin are normal, what's happening behind the scenes right now is much more important than just price. Let's break things down in a clear and simple way. The first big thing shaping Bitcoin today is the increasing involvement of large financial institutions. We all know that in the past, Bitcoin was mostly driven by retail traders, everyday people buying, selling, and trading. But now, major financial institutions, investment firms, hedge funds, even pension funds are entering the market. And the biggest gateway for them has been the Bitcoin Spot ETFs. These ETFs let big investors buy Bitcoin through regulated markets, without dealing with crypto exchanges or private wallets. Because of these ETFs, billions of dollars have moved into Bitcoin. And every time we see strong inflows into these ETFs, Bitcoin tends to get more stable and gain strength. When inflows slow down, we see short periods of price correction. So right now, institutional behavior has become more important than retail hype. Meanwhile, regular investors, retail investors, have become more strategic. People are not just buying emotionally like before. They are waiting for confirmation signals. They want to see whether Bitcoin is about to start a new rally or whether the market is preparing for a temporary pullback. This cautious and smart behavior shows maturity and growth in the crypto community. Now let's talk about something extremely important, the Bitcoin halving. The halving event happens roughly every 4 years and reduces the reward that miners get for producing new Bitcoin. The next halving will once again cut the supply of new Bitcoin entering the market. Historically, this has been one of the strongest drivers of major bull runs. After every halving, Bitcoin has eventually gone on to set new all-time highs. But this does not happen overnight. First comes a period of adjustment, consolidation, and accumulation. Miners often sell some of their holdings before the halving to prepare financially. That selling can affect price in the short term. But after the halving reduces supply, if demand stays the same or increases, price naturally starts rising again. This is basic supply and demand economics working in real time. Now let's zoom out for a broader perspective. The global economy has a strong influence on Bitcoin. Central banks change interest rates to control inflation. When interest rates are high, some investors shift away from risk assets like crypto. But when interest rates fall, or when inflation becomes a problem, Bitcoin starts becoming attractive again. Bitcoin is often seen as a hedge, a digital store of value, similar to gold, but easier to move and use. Speaking of global situations, geopolitics also plays a role. In countries where national currencies are losing value, or where governments impose restrictions, people turn to Bitcoin. They use it to protect their wealth and to access financial freedom. This kind of real-world adoption is growing fast. Now let's talk about the technical side, the chart movements. Bitcoin is currently trading close to a price area that acts as a major support zone. If Bitcoin holds this level, buyers may continue to accumulate, giving the market strength to push upward. But if the price falls below support, we may see a temporary decline. On the upside, if Bitcoin manages to break above the resistance levels with strong volume, we could see a new upward trend beginning. Traders and analysts are watching these levels carefully. Price breakouts at resistance often lead to rapid movement because confidence comes back into the market. Let's talk about on-chain data. This is one of the best tools we have to understand the real behavior of Bitcoin holders. Recent on-chain data shows that long-term holders, the ones who believe in Bitcoin for years, not weeks, are accumulating. They are not selling. They are buying and holding. This reduces the amount of Bitcoin available on exchanges, and when exchange supply goes down, it usually means that future price pressure will be upward, not downward. Whale activity, meaning the movement of wallets holding very large amounts of Bitcoin, is also showing accumulation signs. When whales accumulate, it usually means they are expecting future price growth. If they were selling, it would signal the opposite. But right now, the data shows accumulation. That is a strong positive sign for the long-term outlook. Now let's talk about regulation. In the early years, regulation news often caused panic because there was fear that governments might try to ban or limit